It's time to explore the financial benefits associated with the modern-day oil boom that is sweeping the nation. Get ready for Crude Awakenings with Brandon Cox.
Before we left and went to break there, we had Chris Jarvis on the phone here. And I asked Chris the question, as we start to see oil prices starting to go up, does that have a impact on what the value of what shares are going to be for these oil and gas companies on the publicly traded side? And the only reason why I'm asking Chris is this, because, I know a lot of you guys out there trade stocks that listen to the show, and, pipeline oil and gas in our model is completely different than investing in an oil and gas stock. And just primarily because you're able to participate in the tax benefits directly, as well as the monthly cash flow associated with the project versus a publicly traded company. That's not the case. They get the cash flow benefits and they get the tax benefits. So, Chris, if you would, please enlighten us and kind of share with us your thoughts on how those rising oil prices affect those oil and gas companies out there in the market.
Certainly, and I've had this question quite a bit. Aside from doing risk management for Merrill, I was also an energy analyst covering oil field service stocks. So, to answer your question, absolutely higher energy prices mean higher profits. However, and like you said, the cash flows that are earned to these publicly traded companies, that capital is going to get redeployed to other projects and other investments and other capital expenditures. So, and the only way that these cash flows will show up in the valuation of the stock is if the redeployment of this capital pays off. So you kind of, you're not getting a direct benefit, and you're also kind of, you're looking at management and how management's track record of taking profits and redeploying it and generating future growth. If you have a well-managed company, certainly it can benefit equity shareholders and enhance the multiple these stocks trade at. But again, it's more, when you're looking at, okay, I want to take advantage of higher energy prices, I want to buy a publicly traded company, I certainly would look at mature management teams that have a track record and be a little bit skittish about new management companies that, possibly don't have the long track record that some of these other majors have.
And all that stuff makes sense. And that anytime you're investing, you want to do the best you can to mitigate the risk associated with that investment.